Okay, hi all. I'm just going to go through a few of the months from the 2009 tabular statement. So the first one I'm going to go through is the April month. And in April it says, Yates Limited decided to revalue the land and buildings on the 1st of April 2008 at 970,000. The land element is 140,000. So in order to help me, and rather than writing it all out again, I actually have the solution here. So I'm just going to go through the figures in the solution. So the first thing to say about that April one is Yates decided to revalue the land and buildings at this. So wanted to bring the land and buildings value up to 970,000. So before we can decide what to put in, we have to see where does the land and buildings stand before April. And we can see land and buildings here is 660 plus another 260 in January for a new business that was bought. So altogether, the land and buildings are 660 plus 260, which is 920,000. So if we want to then bring it up to 970 from 920, we have to increase it by 50,000. So that's why there's a plus 50,000 here in the land and building section. Then anytime you do a revaluation, you reset the depreciation back to zero. So in order to make this depreciation, which is currently minus 52,800, in order to make that a figure of zero, we have to put in a plus 52,800 to cancel it out. So those are the two figures you put in. The total of those two figures is this 102,800. And to balance those two figures and this amount here of 102,800, we just have to put in the revaluation reserve line down here in the liabilities 102,800 and a total of 102,800. So that is April. The next one then I want to go through is August. And August is sort of a combination of I suppose two that we might have seen before. One of them is, it says, a payment of 1,750 was received from J. O'Brien, a debtor whose debt had been previously written off and now wishes to trade with Yates Limited again. This represents 70% of the original debt, and O'Brien had undertaken to pay the remainder of the debt in January 2009. So prior to this 2009 paper, we've seen that come up before, but now there's an extra bit onto it. On the same day, goods valued at 500 were sold on credit to O'Brien. This is a markup of 25%. So what I would do is I would take these separately and then look at the overall answer afterwards. So first of all, taking the first bit, skipping the on the same day goods valued at 500 were sold on credit to O'Brien. So skipping that last part. So payment of 1,750 was received from O'Brien. That represents 70% of the original debt. So I would definitely do a bit of maths up here. 1,750, that represents 70% of the original debt. So get my calculator out, divide by 70 and multiply by 30 if you want to know what the other 30% is. So I'm just going to do that now. So 1,750 divided by 70 gives me 25. So 25 euros is 1%, and multiply by 30 to give me the 30%. That's 750. So excuse me, we received 1,750 from this debtor, and the debtor has said, I'll pay the remainder in January. I'll owe you the remaining 30%, the other 750. So just to do that bit, and I'm going to write it in red here in the August column, and then we'll add in the last line afterwards. What would happen? We received 1,750, so our bank account, if there were money in the bank, would go up by 1,750, but since it's an overdraft, the amount we would owe the bank would go down by 1,750. So I'd put that in as minus 1,750, just as it is here. Then the debtors, that debtor says, I will owe you the other 750. So our debtors, which is just the amount of money owed to us by people, will go up by 750. So debtors here, I would go plus 750. And obviously there's a little more to be done to that in a minute. Excuse me. So then the last thing then is, well, if we received money in our bank to the tune of 1,750, and we got our debtors going up by 750. That means altogether we've gained 1,750 and another 750 asset. So we're better off to the tune of 2,500. That is the amount of your bad debt recovered, which is a gain in the profit and loss account. So your profit and loss goes up by 2,500. So plus 2,500. Now, that would be all very well and good if there wasn't another line. This would then be a total of 750 here, and the two of these together would give you a total of plus 750 here. But now we must take the second part of the question, where it says, on the same day, the goods valued at 500 euros were sold on credit to O'Brien. So we sold more goods on credit, so O'Brien didn't pay us yet. We sold them, and we sold them for 500, but that's a markup of 25%. Now, a markup of 25% means that we sold them for 125% of the cost price. So that 500 euros selling price, oops, put it over here, selling price that we sold the goods for is the same as 125% of the cost price, because a markup is cost plus a certain percent. So if the markup is 25%, the selling price is cost plus 25%. So let's see now. We want to get 1%. We divide by 125. 500 divided by 125 is 4 euros. And if we want to get 100%, which is the cost price, we multiply that by 100, which is 400 euros. So let's look at what happened on the same day. We sold goods for 500 euros. That's the selling price. On credit means they didn't pay us, so they owe us another 500. So if we go to our debtors have to go up by another 500. We're owed another 500. So that 750 and that 500 make up this 1,250 if you add them together. The cost of the goods that we sold was 400. Well, that means our stock goes down by 400 because we value stock at cost price. And if we sell those goods, we no longer have them in our warehouse, minus 400 there. So that's fine as it is. And then the difference, if you sell them for 500 and they cost you 400, that means you make a profit of 100. So down here, our profit and loss goes up by 100 plus 100, and that's what gives us this 2,500 plus 100, this 2,600 here, and that's where all of these figures came from.